But in the meantime, it's focus all out today, as I said, on the metal space. And of course, we did have the news with respect to Trump's tariffs. What's going to be the implications for India, for all of these cement stocks in terms of their overall export contribution? Pardon me, in terms of the metal stocks, in terms of their export contribution. Mubina, fill us in.
Yeah, Van. It is, he has been defiant. He has completely ignored all those warnings in relation to a global trade war. But mind you that it is a watered down version. So Canada as well as Mexico have actually been excluded from this, perhaps because, probably Donald Trump may have wanted a bargaining chip when it comes to the NAFTA renegotiations, but that's of course anyone's best guess. And more importantly, he has used national security as a pretext to really impose these tariffs, which are of course, it's a claim that sounds spurious to many. And this is something that may prompt even, the European Union and other countries to essentially go into this all-out trade war. And in turn, of course, we have heard even the European Union essentially say that we are going to put tariffs on things like on bourbon and on Harley Davidson motorcycles. That's of course one part of the story, about the global trade war. But let's talk about the India impact. India had upwards of about 100 million tons when it comes to steel production, but conversely, we exported only about 0.9 million tons, if reports are to be believed, to to the US in 2017. So directly the impact is quite low, but what of course everyone's fearing is the fact that there is going to be the rerouting of shipments by the old by the old guys like South Korea as well as Russia and all these countries that have earlier been blamed for dumping steel into India. Once again, the fears are that these guys are going to again resume dumping steel products in India. Let's discuss that and more with Amit Dixit, research analyst with Edelweiss Securities. He joins us now, and he's going to be with us for the next 45 odd minutes to discuss more about the metal space as well as answer all of your viewer queries. Amit, good morning. Thanks so much for joining us on this very special edition of Buy Now, Sell Now Metals. I was just talking about this all-out trade war that has of sorts come by. But I also want to talk to you specifically about metals. We are seeing that the last 2 weeks have seen base metal prices crack significantly. To understand, firstly, A, what sort of an impact is this trade war going to have on prices? And B, India will see an indirect impact due to the rerouting of the shipments. Do you see that once again there is a possibility that steel in India could be again in trouble?
Yeah, good morning. First of all, the trade war, and now it's like final that Trump has imposed tariffs of 25% on steel and 10% on aluminium, and excluded, thankfully, Canada and Mexico. The overall impact, I believe, would likely be muted. However, there are two impacts that I would classify it into. The first one is, of course, one has to see, the quantum of exports that was always in question. So the quantum of export to US or the US that imported world over was around 35 million tons. Now, out of that 35 million tons, approximately 5.6 million tons was from Canada, with Mexico chipping in another 4 million. So therefore now, you have a situation wherein, first of all, this is out of the equation, the 9 million odd tons. And then with this tariff, if you really see the operating cost of the countries that were exporting to US, so out of 35 million tons, already 28 million tons was the capacity almost that was like below the operating cost of US. The rest was always above. So this was like a specialty steel from Germany, etc. Now with this tariff increase, even if you bump up the entire the operating cost of all the exporters to US, you have around 18 million ton capacity, which is like below the operating cost of the US. So therefore, the overall impact in the absolute terms, I don't think, particularly after Canada and Mexico being left out, would be more than 10 million tons. So that is a direct impact on the global trade flows. But the indirect impact that can come through the rerouting, particularly by South Korea, by Japan, that is likely to be significant, and that is quite uncertain at this point in time. And that is what is spoofing off the investors, I guess. So, and that indirect impact, I mean, it's very tough to place a finger on that impact. But at the same time, if you see in context of Indian steel producers, so far, the kind of protectionist measures we have, they are largely irrelevant because global prices are quite high. But I do expect that the global prices will temper down as a result, and therefore we might see some of the steel making its way to India. But at the same time, I would like to add that the overall fear that we have, of the steel being dumped in India, this is like largely overstated and over-expected. So, while I see in near term that there are concerns and the steel stocks would temper down, but in medium to long term, I really see Indian steel more of a domestic story. And if at all, there are some shipments that make their way to India. Of course, Indian government has always gone by very logical analysis of the imports, and then we would see what kind of protectionist measures it will have in place.
Right, Amit, Siddharth joining in conversation. Now, since the impact of what's happening globally would have very less impact on our markets as such, and you are not anticipating any major dumping of steel in India, then what makes you more bullish on non-ferrous space compared to ferrous space? And as I go through your report, you prefer zinc to aluminum. So, what's the rationale behind choosing non-ferrous and not ferrous?
Yeah, sure. I mean, a very relevant point. We have been bullish on non-ferrous for some time now, and the bullishness basically comes from the supply constraints. See, the way I look at the sector, I am more driven by volumes because prices are not really in anybody's control. So, volume plus the ability to ramp them up, and then cost leadership. So, these are the three driving points that typically I go by. If you see non-ferrous as compared to ferrous, there is still a lot of spare capacity around the world despite your structural changes in China. But in case of non-ferrous, particularly in zinc, the supply constraints are here to stay. Just to give you an example, if like for next 2 years, although the consumption of zinc might increase by just 2%, but and production is going to increase by almost 5%. But if you see the overall deficit, that is going to sustain. Similarly, in aluminium, while deficit won't be there, but market will remain
Right,
largely
Amit.
in balance. In steel, particularly, we have a lot of yeah.
Right, right, Amit. We understand that you seem to be more bullish on spaces like zinc, aluminum, copper rather than steel at this point of time, and we'll get more in detail that why that is so. But let's also welcome Kunal Botra into the show. Kunal, your calls today, Hero MotoCorp and Jubilant Food, they are doing fabulously well, and now you're suggesting to buy Bajaj Auto, sell Hindalco. Now, though fundamentally things would be positive for metals, but this is a short-term call. So, why sell Hindalco, Kunal? And Tech Mahindra, I'm not surprised. IT is again doing well today.
Yes, Siddharth. So the flavor of the market remains the same. IT stocks, I think after a bit of 2 days of pause, I think they're now trying to make a good comeback. Tech Mahindra is on the verge of a strong support. I think at 600, 605, there are multiple supports which have been there for the stock. It's rising again from those levels. So I'm suggesting a buy on Tech Mahindra, keeping those levels into support point. Look out for targets closer to 644, stop loss at 605. Hindalco is a sell now. Most of the metal stocks, they are showing signs of renewed weakness on short-term charts. SAIL, Jindal Steel, JSW Steel, as well as Hindalco. I think all those stocks have now shown signs of breakdown of their key support levels as well. So Hindalco is a sell from my side. Targets now closer to 200, stop loss at 230. And after Hero MotoCorp, I think even Bajaj Auto is showing some signs of good support. Since last couple of days, and I believe that with slight bit of pickup into the auto pack overall, I believe even Bajaj Auto could rally from current levels. So that's a buy from my side. Targets of at least 3020, stop loss at 2920.
Okay. Kunal, stay on with us as we'll take our discussion forward in the metal space. We have received a whole host of queries actually coming by for Amit Dixit in the metal space, and we're going to start by answering each one of them. First up, we have Nikita Chandran, who has sent in her question. She says she has bought 300 shares of Coal India at 335 rupees per share, and she wants to know if she must hold or sell. Well, definitely an underperformer, especially compared to what the rest of the metals and mining pack has done over the last 1 year. The only trigger for Coal India really has been the dividend, if any, that it would pay out. Recently, of course, it took its price hikes, steep ones, so there is prospects, of course, of those price hikes helping the company cover up on the increase in cost via the employee cost. But we just did a cover as well on the Lal Street, which indicated that there is a possibility of a very high dividend payout for Coal India. Amit, I reckon that as well is a short-term trigger that you're watching out for when it comes to Coal India.
Yeah, exactly. You're right that the most of the benefits of price increase and the increase through other methods like evacuation charge and all is already priced in. So I don't really see it as a mover for the stock. But dividend, you're right. I mean, the entire street is expecting a very high dividend from Coal India as well as Hindustan Zinc, by the way, and that could be the short-term trigger for the stock, to be honest. But beyond this, I really don't see any additional triggers on operating front.
All right, that's the outlook coming in on Coal India. 305 is where the stock is currently perched at. But let's chat technicals as well with Kunal. And Kunal, fairly choppy over the last month or so. What do you reckon our viewer here should do with the stock?
I think on charts, on basis of charts, both on the short term as well as on the slight medium term time scale, I think you can hold on to your investments in Coal India. The primary reason is that this is a relatively low beta stock. So for a low beta stock, even if you see a recovery which is based on more of a time, so if it takes 3 months to recover 8 to 10%, those are stable and strong trends which sort of pan out for these low beta names, large cap stock for Coal India. Now look at the last 3 months or 4 months of price performance. You've seen a good recovery happening into the stock. It's not broken the long term downward sloping trend line as yet. So that long term pressure is still there on Coal India, but on the short term time scale charts, there are quite few evidences that you could probably spot that the stock is starting a strong or a fresh short to medium term uptrend. So on the basis of that and the fact that you've bought at slightly higher prices from current levels, I believe you can still hold on to it. Maybe if the stock comes back to say 330, 335 is where you could look to reassess your investments there.
Okay, there you have it. That's of course a call coming in when it comes to Coal India. Amit is of course recommending a sell at a level of 315. Kunal is saying a hold. So based on of course a rationale given by both experts, it's a call you will have to take. Let's bring on board our next query. It's Neeraj Shah, who has sent in his question via email. He says he's holding 1,800 shares of NMDC. He's bought it at 122 rupees per share, and he's saying he can hold it for another 3 months. He wants to know if he must hold or sell. NMDC has of course started moving a bit only in the last couple of months, but of course, even though there has been a significant rally coming by in iron ore prices, it's now perched at approximately levels of $80 per ton. NMDC has not seen a direct-to-direct correlation as such with iron ore prices. Amit, what do you think are the prospects for this iron ore miner?
Yeah, see, as far as NMDC is concerned, I would say that the stock is at a very attractive valuation, as I mean, it is one of the cheapest in the whole metal and mining space that we track. Now coming to fundamentals, iron ore prices have been falling over last 1 week because of the stockpiles in China, and partially because the production cuts in China also have been staggered, particularly in Tangshan. So that is the reason why we have seen the the stock, or for that matter global stocks, underperforming. But at the same time, if you look at the in medium term, I believe NMDC would be in an advantageous position, because the price hike that was taken in January has been only partially rolled back. and therefore Q4 I would see NMDC again going up to around 1800 rupees per ton kind of EBITDA, which was last seen almost 10 quarters back. And more than that, I believe that NMDC would be able to sustain that high level given the production constraints in Odisha. And these production constraints are, well, there has been some relief with Sirajuddin and SL Mining resuming operations, but at the same time, in near term, we see that some of the cases again coming back, and particularly the the rebidding of iron ore mines that will happen in FY20 would be again a major trigger. So therefore, I see NMDC very nicely placed. First of all, it is ramping up its own capacity, and then you have a market in which you can play. And iron ore prices, in all probability, though there would be near-term pressure, but if he is willing to hold for 3 months or more, I believe things would even out. So I think it's a very good buying price, and I would recommend to hold the stock.
Okay, the overall financials could improve. You can see the company being a beneficiary of the potential supply constraints in Odisha. So fundamentally, the stock looks strong. Kunal, what is the outlook based on the chart pattern? After seeing some sort of a recovery around 160, once again, the stock has tempered off. Do you believe, like, we heard out the view from Amit that if one is patient in NMDC, that you can reap benefits?
Yes, Avan, I would second that opinion, and I think at 120 you bought it at a very attractive price, because the last 6 months most of these stocks have gone through their typical nature of high beta trends. So from 115 the stock rallied till 160, 165 approximately, and thereon you've seen a correction happening. So now in terms of supports, in terms of 6 month supports, in terms of 1 year supports, you have series of strong supports coming at 110, 115 levels for NMDC. So keeping that in sort of regards, and keeping the buy price into perspective, I believe that you've bought at a very attractive price. Now if the cycle turns, which I believe could probably happen for stocks like NMDC, because these stocks on short term charts have also formed a double bottom sort of a pattern on bullish RSI divergences. So a lot of technical terms there, but net to net, I'm trying to indicate that these are very attractive prices which you bought, and I believe if you have a time frame of slightly more than 3 months, so maybe a 6 month plus kind of time horizon, I believe you stand a better chance to gain on your investments in NMDC.
Okay, hope you've taken note of the advice. I think the key here is to be patient, look to hold on, Neeraj, to your investment in NMDC for slightly the long haul. On that note, tell you what, we'll take a quick break right here on the show. Stay with us. On the other side, Amit takes us through his top picks within the metal space, which are the stocks that are wealth creation ideas. And we have Manas Jaiswal, who joins in with his top technical recommendations. In the meantime, if you have any questions or queries, what you're waiting for, please reach out to us and we will help you out.